to The Insurance Lawyer, the podcast where we discuss topics concerning claims and lawsuits between insurance companies and their policyholders. I am your host, Evan Schwartz, founding partner of Schwartz, Conroy & Hack. The firm represents business and individual insurance policyholders in claims and lawsuits against their insurance companies, helping policyholders get their claims paid. Today, we're going to discuss what type of insurance you need in this current environment with all the changes that have happened since COVID and all the other changes that have happened in recent times that affect the coverages that you need and the costs to obtain them. And I'm pleased to have with me today Senior Counsel and Director of Risk Management Services at SterlingRisk Insurance. And his name is Josh Weisberg. And I am happy to say I've worked with Josh Weisberg on a number of different matters over the years. And he is not only an excellent broker, but a fierce advocate for his clients in helping them get claims paid so they don't have to come to me. So Josh, happy to have you here.
Great to be here, Evan. Thank you so much.
All right, so what we're going to do is we're going to talk about three different topics today. One's going to be your sort of general commercial office environment and what type of insurance you need for that. Then we're going to move to manufacturing and what type of insurance is essential for a manufacturing business. And finally, we will conclude with construction and the construction industry and all its unique challenges and what type of insurance we need for that type of industry. So Josh, tell us in general what you need if you are in a commercial office environment at this point in time.
Evan, first of all, thank you so much for having me today. I'm really excited to be here. It's a tremendous opportunity for me to share some of our collective wisdom with your clients and with your podcast audience. As you said, we've worked together for a number of years now, and it's always interesting to get together and have a conversation about what kind of claims you and I have worked on together, because I think they're a great springboard for some of the conversation we're going to have today. And then what we're seeing. Really, what are we seeing in the environment today? And it is no question a challenging environment. I think you and I would probably agree. We are in the most atypical claims environment that has ever existed, frankly, in my estimation, in the history of this country. Between COVID and the prospect for bodily injury claims, between riots and the activities surrounding some of the political demonstration activity that we're experiencing here in the United States today, and all sorts of other disruptions within the general claims environment, it's critical for policyholders to understand what are my exposures in this ever-changing landscape, and what do I need to buy? What do I need to buy? And more importantly, if I know that I've got the coverage that I need or I'm ready to buy what I need, how do I maintain that program? How do I make sure that that insurance program is working and working best for me? So we're going to go through a few different aspects or pieces of all of that. But as a broker who works in claims, I'm kind of uniquely situated in the sense that not only do I see the claims, but I also see the market, and I see the way the market is changing, and I see the products that are being introduced into the market to adapt to this atypical claims environment that we're living in today. So let's start with that commercial office-based kind of exposure, because that really is an area where there's a lot changing right now. We've all seen the articles that have talked about what's the world of the commercial office space going to look like post-COVID or even midterm COVID as people come back to their offices, as people reboard. What are the exposures that you need to see there today in order to make sure that you're fully protected? And it all starts, in all honesty, it starts with COVID. So if you're going to bring workers back into your office space or you're about to take a commercial lease, what do you need to know about what insurance risks you face? And it absolutely starts, in my estimation, with liability exposures. It starts with, am I faced with the prospect of a bodily injury claim related to COVID? And all that really means is this: as a commercial tenant or a commercial property owner, you're always going to be faced with the prospect that somebody's going to say that they contracted COVID-19 or they sustained some form of bodily injury associated with COVID-19 because they were exposed to the virus in your workspace. And believe it or not, there's a lot of interesting kind of conventional wisdom out there that says that these claims are going to be very difficult to prove, and therefore there's not a lot of real exposure out there to these kinds of claims. I can tell you that having spoken to a lot of colleagues that practice in the personal injury bar, I don't believe that that is the case. I know anecdotally from having spoken to them that they are warehousing these cases. These cases, in my estimation, are likely to come. And even if the claims themselves are going to be difficult to prove, and what that basically means is they're going to be difficult to prove because you're going to have to prove that you were exposed to the virus in a particular space, meaning in your client's office space, there's still litigation exposure related to all that. And that basically means that if you get sued, you're going to have to pay an attorney, an outstanding attorney like Evan Schwartz, in order to defend that claim.
So you don't want to deal with that. So
you don't want to deal with.
Yeah, even if you could ultimately win the case, who wants to deal with paying a lawyer, assuming you would have to pay the lawyer, and that's where you come in to deal with it? Who wants to deal with the problem? They want the insurance company to just take care of it. Hey, take care of my problem.
Of course, and that's exactly right. And every single general liability insurance policy, which is basically the bedrock, the foundation to your insurance program, gives you coverage not only to pay for those claims in the sense that if you're found liable, the insurance company is going to pay that claimant, but they're also going to pay for your law firm. They're going to pay for the law firm that's going to defend you against those claims, what we call litigation exposure. So if you're starting with general liability insurance, what do you need to know about what's happening in the general liability insurance markets today? And what you need to know is that many different insurance carriers are adding what's called communicable disease exclusions to their policies. And what that basically means is there are a lot of carriers out there that want to get off this risk because they see it coming. So when you're looking at your insurance program, if you're a startup, you got to make sure you don't have a communicable disease exclusion in your policy. If you're an existing business, talk to your broker. Make sure your broker is communicating with you about whether or not you've got a communicable disease exclusion in your policy, or they're going to be introducing it into your policy when you renew that policy. Because if they are, then you really need to have a conversation. And it's interesting, Evan, we thought as COVID really started to ramp up, it was everybody's expectation that carriers wholesale were going to be adding communicable disease exclusions to their policies. That is not completely borne out. The reality is that some carriers are adding them, other carriers are not. So when you're talking to your broker, you want to have this conversation. Talk to your broker about whether or not these exclusions are getting added to these policies.
So do you see insurance companies, in addition, that are going to cover or not exclude a COVID-19 claim? Are they turning that into an increase in premium or some type of a rider to the policy? Or is it just whether they're going to cover it or not?
Great question. For the most part, it's either yes or no. Nobody's looking to add sublimits for communicable disease. Nobody's looking to add higher deductibles or higher self-insured retentions to give the insured some of that exposure. However, and this was going to be my next point, and thank you very much, great springboard, there are programs that are being developed to fill this gap. And this happens all the time. Historically, after 9/11, some carriers tried to enter into this space and to add terrorism risk insurance coverage back into these policies once it became clear that the wholesale market was looking to move away from covering terrorism-related risks. Now, that all changed once the federal government stepped in and said that they were going to reinsure these exposures. But the reality is there are carriers now that are starting to look at programs. So as part of that conversation, it's an ABC kind of process. Number one, look at your policy. Do I have a communicable disease exclusion? Number two, if I do, is there another market that's willing to give me that coverage? And number three, if you can't find it in the conventional market space, you got to start talking to your broker. What's going on with those programs out there? I've heard some information that certain carriers are getting ready to look at this as a potential risk that they're willing to cover. But you also need to understand what are the terms of that replacement coverage. Because what we're starting to see is there are carriers that are willing to give you these policies, but sometimes they come with extremely high premium. They come potentially with significant deductibles. We're talking six-figure deductibles, or they come with extremely restrictive coverage terms. So you got to be very careful about that piece of the process too. But great question, Evan. Great question.
So another question. I assume that you're going to look at the type of office environment and the type of business that is operating there, because so many of the office or commercial office related spaces, they're staying remote right now, but some need to have people in the office. And so the question is going to arise, what's the number of bodies and the frequency of bodies and the space configuration in your office such that, or the number of guests that are coming in that are going to potentially expose you for purposes of the importance of having this coverage?
So I think that there's actually two different pieces to what you're saying right now. One is kind of an underwriting insurance coverage question, and the other is what we would call risk control. And we'll get to the risk control in a second. But from an insurance coverage perspective, believe it or not, carriers aren't looking at, I'm willing to give you communicable disease coverage or COVID-19 liability coverage if you only have, 5 people in the office at any given time. What they are looking at is class of business. So if they think that your particular class of business, even within that commercial office space, is something that they're willing to offer coverage against, then you stand a stronger shot of getting coverage for these COVID-19 liability-related exposures. And what that basically means is if you're conventional office, meaning clerical, accounting, professional, lawyer, that kind of thing, you stand a better shot, right? Now, it's carrier to carrier dependent. Some carriers, again, are just going wholesale. I'm not covering this risk. But others are willing to play. Now, if you get into the more what I would call life sciences kind of perspective, where there's anything that touches on medical, or if you're in a warehouse-related exposure or a construction-related exposure, even within the conventional office space, the back office, they're not going to be willing to offer that because people, from a social distancing perspective, it's much more difficult to underwrite that risk. People are closer together. There's constant interaction, whereas in a conventional office kind of space, it's easier to social distance, or it's easier to affect social distance policy in those kinds of spaces. So that's kind of the underwriting piece to it. Then there's the risk control piece to it. And this dovetails very importantly with what I said was option C before. So the carriers that are getting ready to write COVID-19 bodily injury exposures are looking at your risk control steps. They're going to vet you very aggressively to make sure that you are up to date on the best CDC guidelines, the most advanced cutting edge social distance policies. Do you have the right temperature checking? Do you have the right decontamination checking? Are you cleaning your offices daily? The office spaces that are running on the gold standard stand the best possible chance of getting that COVID-19 liability kind of coverage. So you always want to be doing this, even if you have a conventional carrier that's going to provide you with communicable disease coverage. You still want to make sure you're doing the very best to mitigate against these exposures, because that's going to keep your loss runs clean, your loss experience clean, and that's going to keep your premium down. So it's very important that you maintain those practices.
So another question, because that leads me to landlords, right? So landlords running these office spaces, what are you seeing on that side of things in terms of what they need to be doing to make sure that their coverage, doesn't become extraordinarily expensive or they wind up with exclusions?
So it's a two-step approach. Number one, again, same conversations with their brokers about what limitations do I have on my policies and where do I have coverage potentially for these kinds of exposures. But what really landlords need to be doing, and frankly what tenants need to be doing also, they need to be looking at their leases. You have to look at your existing leases. Leases are getting amended every single day now to address the changing landscape of COVID-19 and the liability exposures associated with COVID-19. Landlords need to look at their leases and see what exposures am I assuming and what exposures are my tenants assuming. As a general rule, a landlord should be taking the position that anything having to do with the demised premises, meaning the tenant space, that's on the tenant. The tenant's employees, that's on the tenant. If they're going to come into the office, I want to make sure that they have every single safety check that's necessary in place, because cross-contamination in the lobby and the common areas, if they bring in an employee that hasn't been appropriately vetted, that's potentially on the landlord. You got to be very careful. You want to have the broadest possible indemnification if you're the landlord to make sure that those exposures are resting with the tenant as opposed to with you. But in terms of everything else, very much the same. You're looking at the same issues, same limitations. Is the carrier going to pick up a COVID-19 claim, or are they not going to pick up a COVID-19 claim? And what can my broker do to help me with that?
Wow. Okay. Really interesting. So we start with the general liability coverage, and generally speaking, most offices will have an all risks policy, right? They'll have their property coverage, they'll have their liability coverage, and I assume that that's the foundation of, the first policy that you want when you're in a commercial office space, correct?
Absolutely.
So what's changing on the property side?
Not much is changing on the property side other than when you're looking at, so if you're a startup business, your baseline bedrock coverage is going to be that what we call business owner's policy, a BOP. And the BOP is going to give you coverage. Let's say you're a tenant. The BOP is going to give you coverage for your improvements and betterments. So if you fit out that space, it's going to give you coverage for damage to your fit out. If you have your computer equipment, all of your business personal property, that's going to get picked up within the BOP policy as well. And then obviously, as we said before, the general liability coverage. In terms of what you'd be looking to add, right? What am I looking to add to my foundation policy, my commercial property policy, or that BOP policy to cover my property? you certainly would be looking to see if there's anything that you can do as far as getting coverage for decontamination related expenses. If you have to clean your office for, somebody, again, in the COVID-19 environment, somebody can, tests positive for the virus. They were in your office space last week. Now I got to do a deep clean. It's great to get those enhancements with the meaning the enhancement that the carrier is going to pay for that cleaning cost. But understand that that's becoming more the exception than the rule. It used to be that these decontamination related expenses were something you could potentially get covered. But like the communicable disease exclusion, you're starting to see carriers restrict all of that. I honestly, especially if you're a startup business, you certainly could explore the possibility of getting environmental coverage or pollution coverage that could, in theory, pick up some of those exposures. Again, marketplace is changing there too to create more restrictive language in terms of whether or not a virus can constitute something that triggers that coverage. But in terms of your core essentials, again, you're looking to cover your improvements and betterments. You're looking to cover your electronic equipment, your business personal property. I don't really think that if you're going to really press on decontamination, especially considering the fact that these deep cleans, if you're a tenant in a space, you always have to do a cost-benefit analysis with your policy. You start pressing for that coverage. The expense associated with decontamination is not as prohibitive as some people think. It's kind of something that you're not looking to press necessarily, especially if you're looking to push for additional coverages that you may need that present with some real exposures. And we'll talk about some of those in a few minutes.
Okay, so we start with the BOP, the business owner's policy, or risks policy, whatever you want to call it. So you're running a commercial office. You need that for starters. Let's move to what else you need. And it sounds like we're going to start with enhancements to that very policy before we get to anything else, right?
Well, actually, I was going to segue into a couple of different coverages that I think are not even necessarily add-ons, but the common coverages or the common policies that startup businesses and even businesses that have been that have been out there and operating for quite a while don't have, and really can end up tripping them up and cause some serious six-figure, kind of seven-figure losses.
So what are those?
So let's start with the cyber policy. And I want to talk about cyber because it's interesting. Cyber is something that's been around now for a little while, cyber liability coverage and cyber protection coverage. There are a lot of businesses that have it, but particularly in the COVID environment, this is something that there's been a lot of literature kind of developed over the last few months because COVID has created additional exposures here, believe it or not. You mentioned remote environment, and this is something that's important to those of your clients that actually have cyber liability insurance right now. Many cyber policies will not include remote network in the coverage. So let's start from just the basic essentials. A cyber policy is going to cover you for certain what we call computer hacking events. So a textbook example would be somebody hacks into your system, they steal social security information, other personally identifiable information. And by the way, the definition of personally identifiable information is very, very broad and very state specific. Something as common as a date of birth, something as common as your driver's license number, depending upon which state you're dealing with, that can actually constitute personally identifiable information. And if you're servicing clients and you're warehousing that information inside your computer systems, it doesn't need to be a credit card number. It doesn't even need to be a checking account number or a bank account number. It could be something as commonplace as one of those kinds of data points. The cyber policy will cover you for the expenses associated with letting your clients know that their personally identifiable information has been compromised. And it also will pay, in many instances, for the credit report protection that you have to provide and all sorts of other ancillary services. The average expense of notifying your clients about these events, and it's legally required. In many, many states, you actually have to do this, and you have to hire a law firm to help you figure out what your notification obligations are. These are six-figure kind of exposures, and each one can cost on average of anywhere between $150,000 to $250,000. That's a lot of money when you start adding it up. So the critical distinction between the pre-COVID world and the post-COVID world is that in the post-COVID world, as you pointed out before, Evan, everybody's working remote. And your remote computer system and your remote Wi-Fi in your apartment may not fit the definition of your network, your computer network, under your cyber liability policy. When you're in the office, that's covered. That's your network. But when you log in remote from your apartment or from your house, say you're sitting on the Cape and you're working from there, that may not be covered. So if there's a hacking event where somebody hacks into your Wi-Fi system, which isn't necessarily as secure as your internal computer system, that may not be covered. So clients need to be very careful. Those of you that have existing cyber policies, you must talk to your insurance consultants, your insurance professionals about whether or not your policy currently covers your remote network exposure. And if it doesn't, it's easy to get that enhancement. So you definitely should get that.
Has that changed the pricing? I know when I got my cyber insurance policy for my office that they were aggressively selling these policies and the premiums were really reasonable. Has COVID changed that?
Well, it's an interesting question. As a general rule, the market has certainly begun to harden, and by hardening, that basically means that premium has definitely increased across the board. Carriers are still trying to figure out where they want to try to book their potential exposures related to some of these kind of new or novel issues. We do know that hacking events, we do know that social engineering events, and we'll get into that in 1 minute, they're definitely on the rise because people are so stretched in terms of their daily work experience and their work environment. They've got so much that they have to deal with that they're not necessarily on their guard as much as they were in terms of trying to protect against these exposures as they were pre-COVID. As a matter of fact, Governor Cuomo's office came out with an alert on this very issue just a few weeks or about a month or two ago, where he expressly warned businesses that they needed to be very, very careful about these new, let's call them kind of adapted or hybrid social engineering scams or hacking scams that were being presented with COVID as kind of the genesis for those exposures. So yeah, I think that you are going to see perhaps an uptick in premium, but I also think that you're seeing an uptick in exposures here. So in terms of the cost-benefit analysis, this is definitely something that you want to look into. Ransomware, for example. Ransomware attacks are up by a manifold percentage point at this juncture. We're seeing more and more of those attacks where bad actors are looking to shut down computer systems and saying that they'll release your information if you pay them somewhere between 5, 10, 20, 30, whatever the number is, $30,000 in order to unlock your systems. Having this coverage is very, very important.
Okay, well, so what else did you want to share about the cyber coverage?
So I think that what you want to make sure that you're doing beyond just that we talked about this before in terms of, general liability, you want to make sure that you have the best possible systems in place to protect against these exposures. Forget about whether you have the policy or not. There's outstanding programs out there that can give you training on what you need to do in order to make sure that you're protecting against these kinds of events. Never click on a bad email. Make sure that you're not clicking on a suspicious link in a suspicious email. That's how you end up with a problem. And it dovetails with one of the core exposures here, which is social engineering. And social engineering basically means you get that email from the Prince of Nigeria. He says, I want you to click on this link and then wire me $5 million. So you go ahead, you click on the link, and now all of a sudden they have access to your entire computer system because they just stole all your passwords. That can lead to all sorts of losses where they then create a fictitious email and they tell you that they're calling from one of your customers or they're contacting you from one of your customers. I need you to wire me $150,000 as soon as possible to my checking account. And then you go ahead and you wire that money. And now it's gone because those attacks are perpetrated from outside the United States. It's very, very unlikely that you're ever going to figure out who actually perpetrated the attack. And now you're out a six-figure sum. Social engineering will help you protect some of that because carriers on the cyber basis will offer you that coverage.
So you're recommending that these business owners in the commercial office environment, that they start with a business owner's policy, they consider a cyber policy. What other policies do you think are important to have when you're either starting up or you're an existing concern?
There's what we call the family of management package liability policies. And that can be broken out into a bunch of different subclasses. There's employment practices liability insurance, and there's private directors and officers insurance, assuming you're not a public company if you're a startup. Employment practices liability insurance is, in my estimation, one of the critical lines of coverage that startups elect not to pursue, and it ends up being something that they regret later on. And to your point before, a cyber policy comes with a relatively low premium price point. Same thing can be said about employment practices liability insurance, particularly if you have, and I would always recommend this to any startup, you're going to have, your focus is going to be developing your business, generating a profit, getting up and running as quickly as you possibly can. But as part of building out your business model, you really should make sure that you have the right processes and procedures in place to manage your employees. Because if you're successful, you're going to go from that, hopefully, you're going to go from that, 2 employee headcount to 25, 30, 40, 50 employees before you know it. And that's obviously a great thing. But if your decision is, I don't need an employee handbook, or I don't need processes and procedures to handle employee grievances because I'm only 2 or 3 people, guess what? Trying to build that out later on becomes harder and harder and harder. So at the ground floor, you want to build out your employee handbook and make sure that you have the right grievance procedures in place, because that's going to help you control situations where you have employee grievances, where you have claims, and hopefully you'll never have them, but you have claims of employee discrimination, employee harassment related to protected classes such as race or sex or sexual orientation. Those are all potential exposures that you face as a new business. And there is an insurance product that can help protect you against those exposures, and that's employment practices liability insurance. And as I said before, it comes with a relatively modest premium price point. It's a great coverage to have, especially as a startup, when you're trying to feel out how you're managing your employees and your communication with employees. We see many, many employment discrimination claims that emanate out of startup businesses because they don't have the right risk control processes in place, the best possible handbooks. Having that coverage in place as a backstop to protect you against employment discrimination lawsuits can be extremely, extremely beneficial.
So my experience in evaluating these employment practices claims in the context of insurance coverage is they are high deductible policies. And the reason they're high deductible is the vast majority of the employment suits that are out there that aren't major exposure cases usually get resolved somewhere in like the less than $100,000 range. They're usually somewhere between like 50 and 100. And so I think the insurance companies seem to know this, and they put the deductible at that point so they don't get stuck with these, what I'll call, highway robbery type cases where you as an employer you can't afford to keep fighting it. And it's at that point where the cost to defend it versus the cost to settle it, it's just worth it to pay $60 or $70 or $80,000, and most of it's not covered. Is that still the case?
I'd say that, retentions and deductibles have come down a little bit on a startup business. You can certainly try to play around with those deductibles or retentions. But one thing to keep in mind, and it's great that you brought up this point because it is an important point, especially in the commercial office environment, depending upon, who your counterparties are. When I say counterparties, I'm talking about your counterparties and your contracts. We have a lot of commercial office clients that are in the services-based industry. And what that basically means, let's say you're in hospitality. Let's say that we have a ton of security clients that provide security consultative services. If you're going to have folks that are going to be out in the field, sales folks that are out in the field that are trying to drive up revenue, there is a corollary coverage to employment practices liability called third-party employment practices liability insurance. And what that basically does is it expands the orbit of potential coverage, not just to harassment or discrimination of employees, but also to harassment or discrimination of third parties. And we're seeing more and more often where counterparties to our clients, counterparties to our insureds, are actually insisting that this coverage be put in place, particularly if there's ever going to be a delivery-based component to what it is that you provide to your clients. So if there's consultative services that you're going to be providing off-site, where you have to visit clients, and there's a concern that one of your employees may harass or discriminate against one of their employees or one of their counterparties, having that coverage in place is something that they're going to mandate. And it actually may be a business differentiator for you. If you can offer a client that you have this coverage lined up, you may actually win some business off of it because it's going to be something that separates you from the pack. But you're 1,000% correct. As a startup, you're looking to insure against shock losses. You're looking to insure against those losses that are going to potentially bankrupt your company. A bad employment discrimination claim can be a real nightmare to handle. And believe it or not, that retention can exhaust very, very quickly because, as you pointed out, these claims can be expensive to litigate. So if you're looking at a $75,000 deductible or retention or $100,000 deductible or retention, that's a lot of risk for a startup to bear. But for those losses that are going to exhaust that retention or deductible, you're now looking at a $5 million employment practices liability policy that's going to settle that claim for you, excess of that deductible or that retention.
Okay, so a going business or a going concern like mine, for example, I may be okay with living with a high deductible versus the premium cost. And that's just a decision you have to make in consultation with someone like you as to, what type of business you have, what type of exposures you have, what type of risks you have, and what it costs.
You raise a good point in terms of you've got kind of this tower of coverages that you're going to look to purchase, right? And the priority starts with that general liability policy, your commercial property policy. You're talking about cyber coverage. You're talking about employment practices liability insurance. You're absolutely going to have to triage, and you're going to have to prioritize as a startup, where are you going to allocate your insurance budget, right? Certainly in my estimation, all of these coverages are extremely important. And if I were a broker for a startup business, I'm going to offer all of them. But, a conspicuous insurance consumer needs to understand that there are going to be certain coverages that they can buy and afford, and there are going to be certain coverages that maybe as you're developing your business, you're going to look to add to your portfolio. Employment practices liability insurance may very well be one of those coverages.
Okay, so to sum up, the sort of trifecta of insurance for going commercial office businesses or startups is a really good BOP or business owner's policy, an employment practices liability insurance policy or an EPLI policy, as well as a cyber insurance policy. And you would say those are the three that are the critical three in evaluating and determining how you want to transfer risk to insurance companies when you're running, an office that is a commercial office space, a white collar space, things of that nature, correct?
Sure. A couple of other coverages that you're probably going to need to have. If you have commercial autos, you have autos in your fleet, you're obviously going to need an auto policy. And if you have employees, you're going to need workers' compensation and employers' liability insurance. Those kinds of coverages are kind of core, right? Those are mission critical and essential. You have to buy them. You obviously want to make sure that you have the best possible coverages there. But, when you're talking about which coverages am I going to add to that portfolio beyond the baseline? Yes, absolutely. Those coverages.
Great. Well, this has been an amazing education, and I want to thank you for all of this information. And I want to thank all of you for listening today. And if you like the podcast, make sure to leave a review and subscribe so you don't miss an episode. You can visit the Schwartz, Conroy, and Hack PC website at www.schlawpc.com for more information. I'm the insurance lawyer. Have a fantastic day.